Simon, you're live.
Hello, everybody, and welcome to another week. Can you believe it's been a week since the last episode? Today, we are in the transition. If you saw on Twitter, I was talking about the studio being set up. So we're in transition. So I'm in a different room today. We've got a bit of a flashing light here, so you might see my face go dark. But today, we're going to be talking about a different form of war and what I think World War III is going to look like using financial weapons of mass destruction. So just before we go into that, there's going to be 6 types of wars that we're going to discuss today. And then the second half, we'll cover our questions as usual in the AMA. We're going to be discussing the possibility of a capital war, the inequality war, currency war, technology war, geopolitical war, and trade wars. All to be resolved through currency wars and financial weapons of mass destruction in the coming weeks. So we're going to be discussing some of those trends and, of course, what it actually means for your investments and your portfolio and how investors need to be prepared accordingly. So just before we go live, let's wait for a few more people, over 100 people in the waiting list. We got Azad moderating as always. So if you've got your questions, please do ask those questions now. Let us know in the live chat where you're coming in from, where you're tuning in from. If you're watching the recording, use the comment section. We return back to those so we can pick out some questions. We go live each and every week on my YouTube channel, Simon Dixon. Thanks to the community, we've got over 54,000 subscribers, and that's growing each and every day. So if you subscribe to the channel, if you haven't done so already, we'll make sure that you're prepared for everything that's coming up in the financial situation, in Bitcoin, in investing, in money, and all topics that we cover. So let me know that you're coming in okay. And if not, we're going to jump straight into the topic. As always, the reason our subscriber base has been growing so much compared to what it used to be is because you've been liking these videos and you've been sharing these videos. So if you like this content, please do hit that like button right now. If you're not a subscriber, hit subscribe, hit the bell symbol and hit all. And YouTube will send you an email each and every time we go live. Had lots of interviews, lots of stuff coming up. Really interesting times today. And I want you to stay on the right side of all these trends. So let's dive straight into the topic. Why I believe that World War III will not be fought with guns or tanks, but why I think it will be fought with financial weapons of mass destruction. So the 6 type of wars that I think investors need to be aware of. And also always remember Retirementplanbcom. We're going to be going live with the 4-part video series next week. It's gone live to all of our shareholders. The feedback has been absolutely off the scale. Really grateful. If you're a shareholder at banktothefuture.com, really appreciate all that feedback you gave. But the video series completely free, where I'm going to be investing $1 million of my personal savings to protect myself from many of the wars that we discuss in this video, and how anyone else can join and do that as well if you want. If you want to be pre-registered for that, then make sure that you have entered your email into www.retirementplanb.com. That's www.retirementplanb.com. And you can make sure that we will be releasing those videos for you next week of how to build and protect your wealth in the Great Depression of the 2020s. So let's get right into the topic. The first thing is capital wars. So really, there was an old paradigm. And the old paradigm was that you had to pick your country of where you would actually do an initial public offering. So I used to work in investment banking. I left in 2006 to tell the world about the unsustainable nature of the banking system. But I used to work in corporate finance, and in corporate finance, we were a member of the London Stock Exchange, or the investment bank I worked for. And we would speak to venture capitalists and companies looking to go public on the London Stock Exchange. And what we used to do is we would pitch ourselves as why London is the place to actually take your company public and float on a stock market. And then New York would be pitching, and Shanghai would be pitching, and Hong Kong would be pitching. And a company would really decide which country that they're actually going to be IPOing in order to do an initial public offering to float on a stock market. And New York almost always used to win, being the largest stock market and the envy of the world, quite frankly, in terms of the floating your company on that. But there's new contenders in town, and this is why we're in the midst of so many challenging geopolitical scenarios that investors need to really be aware of when they're building their portfolio and planning their retirements. The difference is that now approximately 45% of all IPOs, of all initial public offerings, are happening in China and Hong Kong. So that is record levels. And that creates, very friction scenarios and tightened geopolitical situations between America and China, particularly. And so that's a trend that people need to be aware of. The old paradigm used to be, though, that you would actually pick your country. So more and more people started, rather than selecting New York, they would choose Shanghai or Hong Kong as their chosen stock market. And the difference is that now there is also the technology war that we're talking about. So China has really been pushing blockchain technology. They've launched their central bank digital currency already. It's not necessarily needing a blockchain, but within China, they've been really pushing blockchain technology at the governmental level. The US, however, being the incumbent with the most to lose, with the most buoyant stock market, have been really, really resistant against all innovation in the stock markets. They've been trying to protect the traditional New York Stock Exchange, the traditional incumbents, and therefore they've been more resistant to blockchain technology as a disruption to the traditional IPO markets. And the SEC have been making it very difficult, which is the regulator for new initial public offerings in the United States. So China has really been looking at how they can increase the use of technology when it relates to IPOs using blockchains. And at the same time, security tokens are starting to grow as a trend. I still think it's a very early trend. Sorry for the flashing light. You're just going to have to wait for the studio to come. But check out my Twitter at Simon Dixon Twit. And I tweeted out the studio being built so that we can make sure that we get these silly flashing lights and all sorts of stuff. Lockdown has delayed it slightly, but back to the topic. But one thing that the security token industry does promise is the removal of the need to pick which country you actually float your company on. And so therefore, we're going to see a lot of disruption in the future. It's an early trend. I'm investing into security token companies at the moment. Full disclosure, I'm a shareholder in companies like Securitize, at Bank to the Future, the company I co-founded. We've been, looking at that trend. I think it's several years out until this disruption actually happens. But I think you're going to see a lot of disruption in the stock markets as a result of these blockchain-based security tokens. Now, what is the key promise that they actually bring? Well, they actually bring the ability to take your stock tokenized and transfer it to another stock exchange. Many people in the blockchain industry, because they're used to Bitcoin and Bitcoin gives you the ability to own your own money, to spend your own money, they don't see the value of a blockchain solution to that. But when you can interoperably trade between different stock markets, it really pushes the capital market war. So here's what I'm forecasting ahead is that China, who has managed to capture about 45% of all recent IPOs, is also pushing forward with blockchain, while the SEC has been resistant towards it as the incumbent with the most dominant position, making it very difficult for companies to innovate in this area. And therefore, you're going to see a capital market war in the months ahead, which will just increase the geopolitical tension as a result of America getting it has several things that make it the world reserve and dominant economy in the world. Obviously, the dollar, the world reserve currency, but also the most buoyant venture capital markets with Silicon Valley and the most buoyant capital markets with Wall Street. When those trends start to come into question and you start to see disruption in those areas, then you get to see capital market wars, more tension, and a radical shift in terms of the effects that has. Other trends. So that's the first one, is the capital market war. And I think that security tokens and blockchain will be used in order to fight those capital market wars globally. The next trend that we're seeing that can lead to these geopolitical tension is the inequality war. The inequality war arises as a direct result of the Federal Reserve's policy and central banks' policies. So I talk about the Federal Reserve more than other central banks for the reason that what the Federal Reserve does exports across the world. So in previous videos, I've talked about how Federal Reserve money printing exports inflation to China just simply because the way that China has capital controls. So when money is printed and goods are used to purchase goods that China's exporting, that money gets stuck in the People's Bank of China, which is the central bank in China, and they're converted, into renminbi and the Chinese yuan. Because they have capital controls on their companies. And therefore, that's why China's central bank has 1.4 trillion invested in US debt through treasury markets, and also is accumulating the largest physical gold position, trying to compete. They're not transparent with how much gold they have, but that's because of their currency restrictions, because they end up with these excess dollars, and therefore that exports inflation. So America has control; they can export those dollars, and therefore they get less inflation, or the effects of inflation are less in their country. Bit of a tangent, but I thought I'd remind you of previous videos on that. Now, what's that got to do with inequality? Well, because governments don't want to tax, why wouldn't they want to tax more? Well, I think this was the first political campaign. At the time of this recording, we're on the brink of a change in president in the US, where Trump and Biden were. Biden was probably the first president that was actually pitching the candidacy based upon tax increases of the wealthy, which is really to do with, using the trend of the dissatisfaction with the inequality that we suffer from as a country and as a nation, as a global nation, as it were, not just America. So because governments don't want to tax more, because the more you tax, the more likely you are to lose an election, and they can't cut expenses, especially in the pandemic environment where they're servicing record levels of debt in order to try and get the economy back to normality, and they can't afford to do austerity when everyone's struggling already and businesses are in lockdown. They can only do one thing, which is either print more money or move to a monetary renegotiation, which is what I'm forecasting in the years ahead that investors need to be ready for, which is a shift in the way that money is actually created, which has effects on banking, has effects on the stock markets, and has effect on every asset class, including Bitcoin, gold, and others. This will all be covered in terms of specifically how to invest and what I'll be investing in the Great Depression of the 2020s in the free 4-part video series that I'll be covering at Retirementplanbcom. So because governments choose printing, essentially they're choosing the monetary policy no longer working. They haven't got interest rates because we're in and moving towards a negative interest rate environment. And so the only thing that they can do is print more money and purchase assets, which is why currently at the moment we're at all new time highs in stock markets, because more money has been printed. Printing, if you've seen previous videos where I talked about the 6 forms of money and who profits from them, printing is actually a bit of a misleading term, because they're actually using debt monetization and digital currency creation rather than printing. But you get the point anyway. More money, the US dollar supply is increasing in order to actually purchase all these assets. They're doing it through the debt capital markets, through bonds, through treasuries. And therefore, what you end up with is those that own the assets benefiting from all the money printing. And so this increase in the money supply is directly benefiting those that own assets. So who are the people that own the assets? Well, it's the wealthy people that own the assets. Obviously, if you've been watching my videos, I'm always encouraging people to spend less than they earn and accumulate assets. which is what I've been always encouraging people to do, whether you start small or whether you start large. But that's essentially the benefiting from the trends that we're actually experiencing right now, which has led to the most wealth inequality we have ever had in human history. So wealth inequality is increasing and increasing as a direct result of the monetary policy of quantitative easing in order to try and bring the economy back, but it ends up making its way into wealthy people's assets, which is why, even though the economics absolutely suck, unemployment figures absolutely suck, but stock markets are at all-time high because wealthy investors know that stimulus makes its way to assets, which increases wealth inequality, which benefits the rich and those that own the assets. So this is causing ginormous conflicts and tensions between the haves and have-nots as a result of ginormous inequality, which will probably be addressed in my map of the world through issuing central bank digital currency rather than the status quo money printing through debt capital markets, pushing up assets, making wealth inequality larger. I think that we're going to see a movement towards governments and central banks just creating non-debt based money and injecting that straight into trying to address some of this wealth inequality. So you start to see ginormous conflicts, central banks that are actually driving that wealth inequality, and a lot more political tensions as a result of this wealth inequality. So those are one of the other wars. I've always talked about, it was Jim Rickards that came up with the term currency war, or popularized the term currency war. But a currency war is where these World War III is most likely to be settled through hidden wars using currencies. So because cash is a very risky asset, and most people during these times, the non-savvy investors, they sell their assets, they drive themselves to cash, but cash is obviously being completely diluted away. So it's a very risky asset because it means you have to hold it in a bank. The banks, the government's already won the war on cash. Actually holding cash in paper format is becoming less and less attractive, less and less viable. And then they keep changing the paper notes so that you have to, like they did in India through demonetization, you have to end up taking your paper cash, putting it at a bank, and so they can digitize it, and then they can have the control that they need and push the trends as well. But because cash is a very risky asset, then that drives people to actually need the speculative investing as well. So because cash is essentially just used for transactional and you can't save your money, then you actually need to drive that into markets, which drives up wealth inequality as well, because the have-nots paying off their credit cards don't have any money to invest in markets, and those that have the assets are benefiting from these trends as well. So the currency wars is driven really by needing the desire, because of this, because of the cash that's being pushed out, it drives people to needing the bank bail-in becoming more likely. I covered this one in previous videos, so you'd have to return to, I think, a video that's good on understanding why this drives to the bank bail-in. Is actually, check out the video on real estate market crash and the impacts it would have. That was covered right at the beginning of the pandemic, but it's all because of the devaluation that you get in the value. So you're getting a double whammy, essentially. You're getting this devaluation through the hidden tax of inflation. You're also getting these increases in taxes as well that's driving that. On top of that, we're going to move towards automated negative interest rates as well. So because the government doesn't want you to save, they want to drive you to speculation, they're going to automate negative interest rates as a mechanism to discourage savings in cash, savings in money, so that it drives it to the market so that they can create the illusion of growing markets in times when the economics no longer match the reality as well. This is really why assets like, people are looking at rather than holding money in currency. So I often use the word money and currency interchangeable just because people understand that. But more people that understand money consider things like Bitcoin, gold, silver, actual money, or cash as well. And things like that is created at a bank through this debt monetization thing and everything that I talk about as currency. And so because currency always gets devalued and the non-sophisticated investor drive to selling assets, if they have any, into currency, then it's why the currency wars will be won by the countries that have the most money. And by money, I do not mean currency, I mean actual money. And so why you're seeing the largest economies like China, Russia, Germany representing Europe, all actually in a fight in the United States for trying to do gold accumulation. But United States is not actually accumulating or increasing their gold position because they believe in the power of having their world reserve currency and the privileged position of actually being. So I think that the currency wars are going to be won eventually by the countries that have the most amount of gold and the most amount of money, as it were. That will get them a seat at the table in the monetary renegotiation I've been talking about. But smaller countries, how are they going to win currency wars? Well, the only mechanism that I can think of if I were a smaller country is actually taking an asymmetric bet on Bitcoin. So I believe that Bitcoin will be used by smaller central banks and smaller countries as big public companies are using it today. So we've started to see Bitcoin go above $19,000. I primarily attribute that to corporations trying to suck up as much Bitcoin as they can to protect against the cash reserves that they have. They put as much as they can into buying back their stocks, the big tech companies that are benefiting from the fact that all of these small businesses have been shut down. Because all these businesses have been shut down, you got 6 companies that dominate about 25 to 30% of the Standard & Poor's, the S&P 500. And they've been benefiting from all the business lockdowns. You know, everyone's shopping on Amazon, everyone's watching Netflix, everyone's communicating through Facebook, everyone's searching for information through Google, everyone's upgrading their laptops through Apple, and people that don't believe in Apple are Microsoft as well. But because of that, the smaller countries can look at, that's why the large corporations at the moment have been accumulating as much Bitcoin. And you see each week new billionaires, new corporations, and suddenly Bitcoin has become in fashion for billionaires and companies to talk about and applying to the regulators to hold more of their reserves or some of their reserves in Bitcoin. I think governments will be doing the same thing, and the only chance that smaller countries have of competing in these currency wars is through getting on the right side of the Bitcoin trend. So I think that wealthy and super banks and superpowers will be using gold. Smaller countries, individuals, smaller corporations, I think will be using Bitcoin to gain some power. And then we will move in terms of the government level to central bank digital currencies that will be issued much like a phrase that's come out more recently, which is modern monetary theory. Modern monetary theory is where you essentially say, we don't really care. We can create as much money as we want and we can spend it directly without the banks, without the central banks as well. And I think you're going to see more of that. That will be the tools of the incumbent countries that are going to actually be looking to compete in these upcoming monetary renegotiations. One more trend on top of that is you have the super mega global global organizations like the International Monetary Fund, the World Bank, the Bank of International Settlements, that are all looking to build the rails to control the world and scoop up some of those distressed countries as well, and put the tentacles of their central bank digital currencies or global digital currencies. The IMF already has their special drawing rights, which they use in order to issue overdraft facilities to developing countries. And I think we're going to see more and more of that. And we already had that. If you saw previous videos, check out my emergency broadcast on the IMF announcement, where I deconstructed what that means in layman's terms for everyday people when the IMF started announcing that they're trying to move to a Bretton Woods 2. Going to take a quick water break. While I'm taking that quick water break, why don't you hit that like button if you're enjoying that this content, and we'll move to the other wars, the technology wars, and of course, what you can do as an investor to start to prepare for some of these World War III trends that will involve financial weapons of mass destruction. So if you're enjoying that, please hit the like button, please subscribe, and I'm going to take a quick water so I don't lose my voice altogether. Okay, I'm back. So the next war that we were going to discuss is the technology war. This is in full force today. The two countries that are fighting this war right now are United States and China. The two wars that they're trying to actually, the battles between, well, there's a few wars that are happening right now. There's the geopolitical inter-country wars with technology, which are mainly being fought between China and United States right now. And then there's the people versus the government wars as well. So the people versus the government wars that we're seeing, these are the big trends that are really the government trying to take away all privacies, all human rights. Central bank digital currency is a perfect way to administer their ultimate vision of a zero privacy environment. We've all opted into all this technology, so therefore privacy has become a thing of the past ever since 9/11 and all those legislative changes that have happened. But it's really the privacy war versus the surveillance state that many of the governments are moving towards. China is way ahead in this in terms of ultimate technological surveillance of the country. But we've also seen, as a result of Snowden revelations and Edward Snowden, that US has been using technology to remove all privacies, all rights, and all due processes as well. So this is a war I think is going to be lost, but it's going to be encryption versus government surveillance, and encryption is going to be used to fight these wars for the people versus the governments. And in terms of legislative changes, you've also got things like legal frameworks that have been built that conflict with each other directly. At banktothefuture.com, we have to comply with various global regulations. And one of the things we have to comply with is anti-money laundering laws. On the same time, we have European laws that have privacy enhancing laws like GDPR. And often the two are in direct conflict, and you can't simultaneously comply with the two because GDPR is a force for trying to protect privacies, and anti-money laundering is a force for removing all privacies in order to actually fight some of these wars on money laundering as well. So you're starting to see that. But in the geopolitical environment, what you're seeing with China versus the United States at the moment is a race to own all data. This is why when I created a video on my YouTube channel about why I thought when Facebook just announced that they were going to create their currency, Libra, I was very surprised about the resistance it got from the United States, because we obviously know that the United States has a backdoor to Facebook, and therefore Libra launching their global currency would just simply strengthen their ability to actually bring in and suck in all the data globally of not just all the every move you're making, but all the financial moves that you'll be making as well. This is why you're seeing announcements like Trump wanted to ban WeChat and TikTok, because these technologies were created in China, and China obviously uses these technologies to scoop up all the data, just like the United States uses Facebook and Twitter and all these other different types of things. But the only way that these companies can fight back, because I don't believe they want to give all this data, is through implementing encryption by default into their services. So companies like Apple, what they've tried to do is really implement encryption so that they don't have the data depending on their business model. Obviously doesn't work for Google and Facebook and other business models that rely upon having the data. But you're seeing this US versus China technology war. And this is what you started to see with the telcos as well, with Huawei. And you started to see these geopolitical wars by making certain technologies banned. Obviously, China banned Google and Facebook. All of the people just use VPN technology to circumvent those, but it makes them difficult. And now Trump is talking about how he wanted to ban WeChat and TikTok and Huawei and other technologies, hardware and software that comes from China. So that's also the technology war that we're seeing. We're about halfway through right now, so I'm just going to push through the other ones and then we'll try and take as many questions. As I said, if you're enjoying this content, please do help me get more views by liking this video, subscribing to this YouTube channel, and therefore YouTube will share it more, and we get to actually share and I get to give a lot more content on how you as investors, whether it be people starting from scratch, can actually start to think about how you can position yourself. Now, obviously, I'm talking and dumping on quite a lot here with these different types of wars that are happening. But in the 4-part video series on Retirementplanbcom, it will be plain, simple language on exactly how I'm investing in the Great Depression of the 2020s and how that can be done by anybody with any amount that actually wants to see what I'll be doing as well. So just looking also at some of the final wars as well, we have the geopolitical wars that I've talked about. If you want to think about it, some people will be offended when I refer to this, but China, you could think of it as a semi-capitalist stroke communist. It's run by the China Communist Party, but at the same time, it embraced capitalism to give it one of the highest, fastest growing superpower growth stories that we've ever seen. This means it creates an interesting dynamic with people in China. So I used to live in Hong Kong. And when I lived in Hong Kong, I did a ginormous roadshow across 18 different provinces in China with Jim Rogers, the investor. Interviewed him on my channel as well, Simon Dixon, if you want to check out that video and his views about why he thinks Bitcoin goes to zero. And I was talking about why Bitcoin doesn't go to zero. But we also shared alignment, and really just a spoiler alert, is because he thinks governments have the guns and therefore they control the currency. But I've covered in different videos why I think it can't be banned at this stage. Obviously it can be, but why I think it won't be. But anyway, getting back to the China situation, my experience when I spent time in China speaking with people is you had a country that has been through such a ginormous wealth growth. You had people that attribute different ideological ways of managing the economy to their wealth creation. So there was a lot of people in China in poverty, and then there still is, but there was a ginormous wealth growth, the middle class growth in that. So, some elderly people in China, they attribute that growth and increase in wealth to communism, whereas the young people, they grew up born into wealth. And when they're born into wealth, they start to value things like freedom over attaching it to ideologies like communism. And therefore, you start to see a bit of a intergenerational gap in terms of ideologies, like you see in China today, leading to things like the tension in the political environment in Hong Kong due to these value mismatches between intergenerational, and that leads to also more political wars as a result of ideological differences between different ways of organizing economies. I talked in previous videos about the different ways how to end this depression right now and the different type of economic thoughts, whether it is Austrian economics, Keynesian economics, Marxism, and the different schools of thought, for those that are more interested in these different ways of organizing economies and that lead to some of these differences in ideologies. But also, sorry if you're in the United States, but it's moving, whether you have a Republican government or a Democratic government. We now have a Democratic government moving in, and whether it was Republican or not, there is a clear movement with these ginormous dependencies upon the government in the United States and debt cycles in order to prop up keeping the US dollar as a superpower, a shift from capitalistic ideals to more socialistic ideals. So the United Soviet States of America is definitely moving towards a socialism trend away from capitalism. You see that with larger government, larger, ideologies of people calling for government to solve more and more of their problems. That is also driven by wealth inequality, where those that are on the wrong side of these trends feel like capitalism has meant to them being in dire debt, leading to poverty. But actually, it's the Federal Reserve and the central bank policy that's driving that wealth inequality, which is crony capitalism, not actual capitalism as well. So you start to see many feel that their debts and their poverty situations, because of this wealth inequality, is as a result of capitalism. So you get demonstrations and a desire for governments to intervene more and a movement towards the socialist state, which is what you're seeing in the United States at the moment. And then you start to see these real divisive, type almost civil wars. You couldn't really call it the United States of America. You'd more call it the divided states of America at the moment, because they're not really centered around a common vision, the American dream, whatever you like to call it. It's more like the left versus the right that have extreme differences. Now, that's always been there, but you start to see some of these trends as a result, because there's no common ideology. But this leads to extreme measures. So in the UK, the extreme measures we used to see is like a movement towards something like Brexit, for example, a movement towards a movement away from the European ideology, even though they didn't have the euro as their currency. So Britain had like the best of both worlds. They had their own currency, but they got to benefit from the trade agreements. And therefore, you have these extreme measures where everyone votes to take Brexit out of Europe. I'm not putting a judgment on whether that's wrong or right. It's just interesting that Britain had the best of both worlds, and yet it was the first country to try and actually get out of Europe. I think it might be a good move, in terms of the sustainable nature and a movement away from the European Central Bank for other countries. But Britain didn't have the control of the European Central Bank. And finally, we've also got the trade wars. The trade wars are more publicly known, but please do watch out for the political tension that you're seeing in Hong Kong and Taiwan. I think you'll see a movement towards, because Trump actually was moving America towards a more nationalist policy, Biden will be moving it back towards a more globalist policy. And therefore, when you start to see tension like Taiwan and China, Hong Kong and China, you can see more intervention. You're likely to see more intervention there. And things like Europe and Britain and other people looking to get out as a result. So these are a lot of macro large trends that are happening that I tried to summarize and condense down so that investors can understand some of the things that they're going to need to be aware of. So my guess is that the question that you have is, well, how the hell is an investor meant to invest in such times? And the answer is that you've got to be ready for many different outcomes. And so that really brings me into, with all these financial weapons of mass destruction that are going to be used, I think that brings me into the 4-part video series that I'll be covering on Retirementplanbcom. And you can register for free there and get that video series that we will be releasing next week. So in summary, before we go to the questions, before we go to the AMA part, my summary is that World War III will not involve bombs. It will involve weapons of mass financial destruction as a result of some of these wars that lead to currency wars, that lead to monetary renegotiations, and investors need to be prepared for all outcomes. And that brings me directly into what I'll be covering next week and exactly how I'll be investing in this different environment. So I think we went 10 minutes over for the first half, got that out in 40 minutes. But the next 20 minutes, I'll just take as many questions as we can. So Azad, if you've got questions, just before we jump into them, that's the end of this content part. Before we take your questions, if you enjoyed it, please do like this video, hang around, and make sure you subscribe so I can make sure, and also head over to Retirementplanbcom if you want to get access to that free video series that we'll be releasing next week. So Azad, what have we got in the live chat?
We have got tons of questions. More importantly, the background that you're in. Lots of people loving your the dining table, the chairs. So the question on everyone's lip is who picked it out? And I think it's an important question, that one, because not a lot of people know who's behind the scenes in many of the projects that you actually work on.
Yeah, absolutely. All credit to the co-founder of banktothefuture.com, which is Bliss Dixon. Bliss Dixon does not like to be in the public face, so she chucks me at the front of everything because I'm okay to do it. But yeah, this is all credit to Bliss Dixon, the co-founder of banktothefuture.com, my wife as well.
And so a lot of people are asking, Simon, can I have a free copy of your book? Maybe that links in nicely with Retirement Plan B. I believe we mentioned the fact that if they enter the details, that they'll be in to get.
Yeah, so absolutely. So if you don't know the story, I wrote the book. It was the first published book in the world to include Bitcoin, and I launched it at the first Bitcoin conference in the world that I spoke at, which was the first Bitcoin non-US Bitcoin conference in the world, in fact. And my publisher has not actually. He still publishes it, but he doesn't actually. He's never paid anything in terms of the royalties. So he actually keeps all the money. And I've been trying to actually. I haven't been bothered to actually switch publisher because I've just been busy with things, investing in financial technology companies, and now this YouTube channel and all sorts of stuff. So the company is he does that. So I decided, let's just give the damn thing away free. I can't give you the physical copy because I don't have any distribution figured out yet. In the future, we'll probably figure out a redraft or something. I hate writing. I much more prefer talking to camera. So it was a real effort to get that book out in the first place. Glad I did. But anyone that actually subscribes at Retirementplanbcom, and as an incentive for watching all 4 videos, because I want you to watch it, because I think that this information is so important, we'll actually give you a free digital copy of the book. No problem. The book's called Bank to the Future, Protect Your Future Before Governments Go Bust. It still sells on Amazon. And in terms of most of it is still relevant today. The only thing that I underestimated in my youth when I wrote that, I'm 40 now, and I wrote it when I was 30, is actually the importance of privacy. That was the one thing I think I underestimated at the time. Very excited about different technologies. But yeah, so that's where you can get a free copy of the book. So we'll be happy to do that.
Okay, there's one important question which I think is important for me as well, because I live here in the UK. Where do you think we'll be financially in the middle of next year here in the UK? Your thoughts?
So I think we're headed for the Great Depression of the 2020s, and I think the UK has less weapons of mass destruction than other companies, but the fact that it's actually Brexited means that it actually can try and reinvigorate the Bank of England. The Bank of England was the most important central bank in the world that actually created the modern central banking system that we know of today. But the United States ended up using it better due to the Bretton Woods negotiation and then the reneging in 1971 of during the Nixon shock meeting. So in terms of Britain, I think Britain will just be another country. It has an important, it's still important politically in terms of its allies, but the pound is really insignificant in terms of a global currency that can be used in order to fight currency wars. So Britain will be aligning itself with United States, and then United States, I feel, is going to be in a battle with the global organizations in a fight for global socialism versus their ideologies in terms of a shift in the currency. So yeah, I don't think that Britain has a significant clout and power. And the bank, Britain, because it was the last superpower currency, it's got an air of arrogance in its monetary policy that would prevent it actually thinking that it can stoop to the lows of accumulating Bitcoin. And because the Bank of England has so much historical importance in the world, it would be put into the brackets of the incumbents that would be the last to react in order to actually try and shift the power. And at the moment, Boris Johnson is a pleasing, prime minister, and a pleasing prime minister would obviously just go along with the ideologies of the United States, is what I think we'll see.
Simon, when do you think Apple and Microsoft will purchase Bitcoin? I think there's a upcoming AMA that we're going to do.
That's actually one of the topics of a future video that we're going to be doing. There's been so much topical stuff that each time we come up with something more topical, we push the videos over. But I'm going to create a video upcoming on the YouTube channel on why corporations are getting into Bitcoin and what it actually means. I don't think that Apple and Microsoft, I have no indications of whether they're doing anything at the corporate level right now. But many of the companies I'm shareholders in have been putting together great custodial solutions for corporations to be able to manage such things. And the demand is absolutely incredible. I think, I'm a full disclosure. I try and disclose the companies I'm shareholders in as I do, but I'm a shareholder in Coinbase, and Coinbase has now got about $20 billion of funds in custody. And that tends to be for larger corporations, hedge funds, and various institutions that can't actually own their own private key or haven't figured out how to do that yet through a multi-signature strategy. So we'll cover that in a future video.
Thank you. Simon, in Simon's scenario of rising price of Bitcoin, governments will tax profits on Bitcoin with enormous rates, which could spoil the Bitcoin as a safe haven. What is Simon's view on that?
My view is that governments all around the world are going to decide exactly how they treat it. Most of it has already been done. So in the past, I was a director of an organization called the UK Digital Currency Association with my fellow colleague Adam Vaziri and various other people. And HMRC, which is the UK government organization, they wanted consulting on how to tax Bitcoin. And one of the things they did is that they couldn't pigeonhole it into an individual asset class. So they decided to use the essence of how you're using Bitcoin. They said if you're using it as an investment, then it's subject to capital gains tax. If you're using it as income, then it's subject to income tax. And if you're using it as a currency, then it's treated as a currency and has exemptions from certain taxes. So I think that most countries are going to use the essence of how Bitcoin is actually used. But of course, countries are going to want to do a tax grab on Bitcoin. That's an inevitability, which is one of the reasons why they're less likely to ban it because of the amazing amount of taxing potential, which is where tax efficiency comes in, not tax evasion. Setting up a structure where you can defer your tax legally, still in compliance with the tax laws in your jurisdiction, becomes important in terms of the actual way that you purchase Bitcoin. You can still maintain owning of private keys, but putting together the correct structure is how to tackle that, rather than being somebody that's always stressed because you're just not paying your tax. But yeah, I don't think that they're going to put specialist tax treatment. It's more about how they categorize Bitcoin as an asset class. So we've started to see in, for example, Hong Kong, they've started to treat Bitcoin exchanges having to register with the Securities and Futures Commission. We've seen in the United States that they treat all non-decentralized crypto assets as securities. And so these all have different implications, and it's it all really depends upon that. And one of my forecasts will be is that the way that, as blockchain and different central bank digital currencies become more popularized, the way in which countries treat Bitcoin can actually become a political agenda in terms of as more and more people start to accumulate. So I think that the tax treatment of that is going to be defined in each country based upon which category they put it in and the essence of how it's actually used. So a bit of tax planning is important for those. And that's a topic we'll also be covering with our Retirement Plan B clients as well.
I think there's a topic that you're going to be doing, Simon, in one of your AMAs, which you'll cover a lot more. But I think would be ideal if you could answer the question around what is the actual meaning of 21 million Bitcoins? What is the significance that people need to understand? Maybe give a snippet of what you're going to do in the next AMA.
Yeah, sure. I'm not sure that comes into the AMA, but if the question is, what's the significance of 21 million Bitcoins? The significance is that Satoshi Nakamoto, the alias name that was given to the creator of Bitcoin, whether it's a group of people or individual, decided to actually set the monetary policy in advance before Bitcoin was actually created. And in the white paper, it was recently on Halloween, October the 31st, it was the 12th year birthday of the Bitcoin white paper. But in the white paper, it's a short white paper and it's easy to read. But he set 21 million as the fixed supply as a force against excessive money printing with other currencies so that it cannot be devalued over time. And so there's only ever going to be 21 million. But because people lose their Bitcoin, because, for example, in the early days, lots of people lost their Bitcoin, then the supply actually ends up decreasing. There's about 18.5 million already created, and the rest is going to be a reward for miners, which essentially verify and audit all the transaction in what is now the largest supercomputer in human history, called the Bitcoin network. So the significance of 21 million is that. And one of the videos that we're going to cover next week is a question I get pretty frequently on how many Bitcoin should an investor actually own? And that's an interesting question to answer in itself. So we thought we'd do that as a topic next week. So do me a favor, if you'd like to actually get that question answered, and you think that that's a worthy topic, let me know in the comments section or tweet me at Simon Dixon Twit, TWITT, at Simon Dixon Twit, and let me know what you'd like to hear and your thoughts around that topic and other topics you'd like to see. But if you like that topic, then we'll cover it next week. We're trying to figure out a way of getting more input from the community around the topics that they'd actually like to see. But at the same time, we get people that show up, and hopefully if I keep picking interesting topics, then people will keep showing up. And again, hit the like button if you're enjoying it. It helps us and it helps me be more inspired to create better content for you as well.
The World Economic Forum has been talking about a cyber attack that could cripple internet infrastructure. How resilient would be Bitcoin or all other crypto protocols?
Obviously that would have a big impact because at the moment, almost all transactions in Bitcoin actually rely upon an internet. And if we have such cyber attacks, that's where gold is a hedge that every investor should be protecting themselves with for such a type of scenario. In the meantime, if that never happens, then Bitcoin is actually working on a lot of stuff. So some of the companies have actually put Bitcoin in the satellite network as well, so that it's less dependent upon the internet. And the Blockstream team have launched Bitcoin satellites as well, so that it's less dependent upon that. And there's lots of different initiatives. So Bitcoin in itself, the protocol can still function, but actually transacting in it would require actually going via a satellite infrastructure, which is a very, very early infrastructure, but something that a lot of the community members are working on in order to actually make it less dependent upon such an issue. In terms of the Bitcoin blockchain actually being attacked itself, well, it's had a long time and many attacks, and it's just becoming stronger and stronger and stronger until this day. We still haven't had an attack that actually takes the protocol down. And it's now backed by, so to actually attack Bitcoin, to perform a 51% attack, for example, would require an investment of tens of billions, if not trillions soon, to actually try and control network for over 10 minutes and the bombing of multiple infrastructure, as we're on World War III topic. in order actually to achieve that. So it's getting more and more stronger as we go. And especially some of its weak points, like less geographical diversity, is actually moving in greater directions as well. And if one group of miners get taken down, where there's a large concentration of miners, for example, in China, then you'll just see a redistribution in the difficulty rate. And the way that Satoshi Nakamoto created the protocol is when miners switch off, the difficulty adjustment comes down. It makes it more profitable for other miners to mine, and therefore those locations can be moved. And some of the companies that I've been investing in have actually created Bitcoin mining containers, which can actually function in any environment and be warped and moved across different geographies. So the infrastructure, now it's become more institutionalized, is getting ultra sophisticated in terms of making sure that Bitcoin maintains its integrity in different scenarios.
I think we got room for one more question and then your final thoughts, Sai. In scenario of, I think this question is quite relevant in terms of retirement plan B and those who want to get on board, the free videos that are going to be following through. So in scenario of particular countries' ban on Bitcoin possession, if Simon's got information as to what to do in such a situation to protect against such government decisions.
Yeah, well, I mean, the first thing is you want to, I'm not here to tell you whether you should or should not comply with certain laws in your country. You want to do everything by the book, but it depends on the extent of such a ban. Should it happen? So there's a couple of things that you should do. Firstly, you should, no matter how you get into Bitcoin in the initial phase, one of the things you need to learn eventually is how to actually store your own Bitcoin, which is the true power, giving you the ability to own your own Bitcoin, spend your own Bitcoin, and the inflation, the devaluation that the fixed supply gives you. That's one of the things that you should be doing. In terms of the likelihood of that actually happening, well, I created a video called Governments Ban Bitcoin. Check that out. And I think that that's a more likely scenario. What we're starting to see, having been involved in this industry and invested in 100 different companies in the industry, is that governments are more and more moving towards regulating the companies that interact with Bitcoin, integrating it with the banking system. Now, remember, Bitcoin itself cannot be regulated. It is the ultimate tool of freedom for you, giving you the ability to own your own money, spend your own money. But the companies that interact, the offboarding, the onboarding, allowing you to buy, sell, trade, all the different things, is actually where the regulations happen. So the trend that I've seen is not a movement towards banning, but a movement towards regulations, so that the exchanges can actually capture data, so that in case of the fight against money laundering and all the various things, it's more likely to happen at the exchange level. So I think government have a greater incentive to actually try and regulate the companies that are involved in Bitcoin, and leave Bitcoin be, rather than actually ban that. But I do think we will have governmental attacks, and therefore you need to, owning your own Bitcoin is how you prepare, and then you need to decide what's lawful and right, and whether you want to move from that country or whether you want to stay in that country and continue abiding with the law, or whether you want to protest and whether that will get through. But any country that actually does that is probably a country in terms of moving in the complete wrong direction in terms of your personal freedoms, liberties, if those things are important to you, as they are to me. So thank you very much for those questions. We are bang on the hour right now. As always, if you enjoyed this content, please do like, please do share, please do tweet. Please tweet me on Twitter at Simon Dixon Twit. If you're not following me already, please do follow. And if you want more just like this, we'll be live next week. I think the topic that we'll be covering is what we said, how much Bitcoin should one own? And I'll be attempting to answer that question and hopefully be away from the annoying flashing light. I think it's going to be fixed next week. Also, the studio is coming along, so we'll start to have the professional setup coming along rather than being around in my house. So hope you enjoyed that. And please do subscribe. And as always, always remember you are alive at one of the most interesting times in financial history. It's going to be really bad for some, great for others. And I want to make sure that you are on the right side of that change. And next week, we will be releasing those 4-part video series that I've been promising for a long time. So head over to www.retirementplanbcom, enter your name and email. And next week, we will be emailing you with the first video of that 4-part video series, where I'll be investing $1 million of my personal savings in the Great Depression of the 2020s. Over and out. Peace.